Padhraic Garvey is the head of developed market debt and rate strategy at ING, joins us now. Padhraic, if I'm seeking alpha, bonds delivered for me last month, is that going to carry on?
Probably yes, I would say. I think it's still a very bullish environment. If you look at the structure of the German yield curve, the core curve here in Europe, it's the 5-year part of the curve is very, very rich. And this is typically consistent with a bull market. So we're still in a very bullish market. Rates obviously are very, very low, but the tendency is still there for rates to go lower still because of all the stresses and uncertainties that we continue to face.
There seems to be a really interesting debate emerging, a polarization, for instance, in the bond market. You've got on the one hand those believe that we are heading for Japan, and that means the prices can go significantly higher from here. On the other hand, you've got those that believe that Germany is going to be infected, that there is going to be a periphery to core infection, and as a result of which yields will go sharply higher. How do I trade that one? How do I sort of step between those two?
Well, I think through the crisis so far, it's certainly been the latter that's been the case. When we've had periods of stress, there's been a definite flight into the bond product, and I think that stays with us for the next number of months and quarters. I think that Germany is the proxy Deutschmark, so to speak, if things all go wrong, and I think that's the way to play it. Now, the counter argument, of course, is that Germany is in effect paying for the peripheral problems, and that of course hurts Germany from a credit perspective. But that's being put to one side. The credit rating agencies agree as well. They've not downgraded Germany or put Germany on negative outlook. The marketplace agrees too, because we got German 10-year yields down at 1.7%. We've got 2-year German paper practically trading at zero, which tells you how much faith the market has in the German product still.
Could the curve change even more? Are we heading towards Japan in Germany? That's the real crux of the question.
Well, we're not far off a Japan's type curve as it is. You've got to ask the question: where would the German curve be if Germany was a Japan? I think you could argue that the 10-year yield will be down at 1.5%, maybe a bit lower. We're only 25 basis points away from that level. I think the curve is trading where it is, not necessarily because of a Japan-type discount, but it's more because of a flight to safety. If you look at German growth and German inflation, it's actually been okay. Under normal circumstances, the German 10-year yield will be up at 3.5–4%. It is where it is because of an excessive safety flight.
How much is priced into OATs this weekend, and how much more do you think will be priced in Monday morning?
Well, we do have auctions on Thursday in France, and these auctions generally go okay. I think the market is now positioned for an Hollande victory, and there are some negative consequences from that, from a market psyche, because of his negativity with regards to the banks and the notion of potentially unraveling the fiscal compact. But the fact remains that when he gets into power, many of his policies may well be watered down, certainly after having discussions with the Germans. And in fact, the thought process has moved towards a pro-growth evolution going forward, rather than too much austerity, which fits with the current mandate of Hollande. So I wouldn't expect any dramatic market reaction from the outcome.
But would you be happy to put a spread widener on? You think that OAT's over bunds? Do you think that's going to come out again? We're, 120 now? Do you think we're going to get much more than that?
Well, I think we're still in a period of tremendous vulnerability. The past week or so has been positive. We've had spreads coming in. I think France remains vulnerable for as long as its deficit remains so high. So yes, if you ask me what trade would I set on a 1 to 3 month horizon, it would be short France, long Germany.
Padhraic, thank you very much indeed. Padhraic Garvey joining us from ING in Amsterdam.